Time now for Consumer Confidential with KTLA 5's David Lazarus.
Hi, David. Okay, so you're talking about Elon Musk and the tease, and you said he's going back on going back.
Pretty much.
Yes.
That's where we're at.
Okay.
To recap, it's not a sure thing yet, but both Bloomberg and the Wall Street Journal are reporting that Musk's lawyers have reached out to Twitter to say, guess what? After backing out of his $44 billion acquisition of the social media company, now he is back on board and prepared to go ahead with his original offer of $54 a share for Twitter. This after he said there's no way he was going to go ahead with the deal because he believed that much of the accounts on Twitter were actually fake, and that was grounds for him to stop. Then Twitter filed a lawsuit against him saying, no, you've got to go ahead with the deal. And now Musk apparently stepping up and saying, okay, that's fine by me. What's changed? Well, the court date is fast approaching, and there's a number of analysts out there who say that it doesn't look like Musk could have withstood being deposed under oath about all of this because he waived his due diligence when he offered to buy the company. And then on top of that, even Musk's own scientists have said, yeah, that fake account thing, it really doesn't hold up as much as you think it does. So it could be that he was facing a considerable amount of embarrassment if he had to testify under oath. And so now, without haggling, without renegotiating it all, he's back where he started with that $54 a share offer. What happens next? Well, that's still uncertain. Does Twitter want to proceed with the lawsuit just to put his feet to the fire? Will there be some sort of way that the two sides can come to terms? That remains to be seen. Or will Musk back out of backing out of the backing out? Well, with Musk, you never can tell. Here's one thing, though, and that is Musk has spent the past few months criticizing and disparaging the company that potentially he's about to take ownership of. That's not always a recipe for success, especially with the workforce at the company looking at their new daddy and thinking, I'm not sure if you love us. So there's still much to go ahead. In any case, trading in Twitter was halted this morning because clearly the stock was going to be very volatile once this news broke.
Interesting.
Oh, I think the volatility is just beginning.
Oh, yeah, I think so, too. With a guy like Musk, it doesn't end that quick.
All right, the number of open jobs out there has dropped.
Yeah, and this is potentially a good thing. This is why stocks are soaring right now. At last check, the Dow up over 700 points. Thank you very much.
Yay.
This after yesterday's big surge as well. And as Glenn noted, the key driver here is the Labor Department reporting that in August, there were about 10 million job openings, and that's down 10% from the month before, which is being taken by Wall Street as a sign that the Federal Reserve's efforts to slow the economy are working. So that's potentially a good thing. But there's another curveball out here, and that's a new survey finding that the vast majority of CEOs here in America believe that a recession isn't just certain, but that it's going to be a nasty one. And they're predicting that it could come anytime within the next 12 months. So, yeah, the economy seems to be slowing, but maybe slowing too much would be the alert there. But the tightening of the job market is an indication that, okay, the rate hikes might be working, and it could work to slow down the Fed's progress. Right now, when the Fed gets together again next month, a 3/4 point rate hike had been expected, but with these latest stats on the labor front, maybe a 0.5 point increase. We'll watch that as it develops.
Every time I'm in the store and I see the cans of Liquid Death, it always throws me off. I think it's beer, and then I'm like, no, that's water.
Right.
But why the name?
And why is it in a can?
And why is it in a can?
Right, exactly.
Like a 40-ouncer.
I had the same thing. We're talking about Liquid Death. If you haven't seen it, it's sold at Whole Foods, it's sold at Target, it's sold at a number of retailers. And like we just talked about, it's water in a beer can. And that's all it is. And yet, with a new round of funding for this startup, another $70 million has been pumped into it by investors. Liquid Death is now estimated to be worth $700 million, approaching a $1 billion valuation. Not bad for a beverage company that puts water in cans. It's on track to get about $130 million in revenue this year. And if so, that would be nearly triple what it saw in revenue last year. So this kind of puts it in the same fad category as Pet Rocks, Beanie Babies, things like that. But consumers are clearly responding. Even though it's water in a can, it does have a buzzy name, and it clearly has some momentum among investors. I think P.T. Barnum would be very proud.
Yeah, it's all in a packaging.
Oh,
Yep.
so good. Are you back at 1?
You bet.
Okay, we'll see you then. Thank
right.
you.